There's a timeline that governs the rise and fall of empires, but you will not find it in a history textbook. You will not find it in the minutes of the Federal Reserve. It is a timeline written in the ledger of global commerce, and for 500 years, it has followed a terrifyingly precise rhythm. In the 15th century, the Portuguese Real was the world's currency. It reigned for roughly 80 years. Then it collapsed. In the 16th century, the Spanish Real took the throne. It reigned for 110 years. Then it collapsed. In the 17th century, the Dutch guilder, 80 years. In the 18th century, the French franc, 95 years. In the 19th century, the British pound, 105 years. If you take the average lifespan of every global reserve currency since the year 1450, you arrive at a specific number, 94 years. That is the statistical life expectancy of world dominance. A reserve currency is born, it matures, it grows arrogant, it debases itself, and then, almost exactly 9 decades later, it dies. Now look at the US dollar. Most people believe the dollar became the world reserve currency after World War II, at the Bretton Woods Conference in 1944. But that is technically incorrect. The dollar officially overtook the British pound in global volume and trust in 1931, the year Britain abandoned the gold standard and the pound collapsed. Do the math. 1931 plus 94 years equals 2025. We are not approaching the end of the cycle. We are literally standing on the expiration line. The media tells you that the dollar is strong. They point to the DXY index. They tell you there is no alternative. They tell you that China is collapsing and Europe is stagnant, so the dollar is the only game in town. They are looking at the waves on the surface. They are ignoring the tectonic plates moving underneath. Because while the dollar looks strong against the euro or the yen, it is collapsing against the only thing that matters, physics. In the last 4 years alone, the U.S. printed 80% of all dollars in existence. We weaponized the SWIFT system, seizing the assets of a sovereign nation, telling the world that your money is only your money if Washington agrees with your politics. And now, the clock has run out. The 94-year cycle is demanding a reset. In the next 18 months, we are going to see a shift that will make the 2008 financial crisis look like a regional hiccup. We are looking at the end of exorbitant privilege. And when a reserve currency dies, it does not die peacefully in its sleep. It dies violently. It creates wars, hyperinflation, and a total rewriting of the rules of ownership. In this video, I am going to walk you through the anatomy of a currency death. I will show you the 3 signs that have appeared at the end of every single empire in history, signs that are flashing red for the dollar right now. And I will explain why the next dollar isn't the yuan, or Bitcoin, or gold, but something much stranger. The stopwatch started in 1931. The 94 years are up. Let's look at what happens when the time runs out. To understand why the dollar is dying, you have to understand what a reserve currency actually is. It is not just money. It is a product. The United States exports the dollar. We send pieces of green paper, or digital entries, to the world, and in exchange, the world sends us cars, oil, electronics, and labor. It is the greatest trade deal in human history. We get real stuff. They get paper promises. But like any product, a currency relies on one thing: trust. Trust that the issuer will not print too much of it. Trust that the issuer will pay their debts. Trust that the money will still buy the same amount of bread in 10 years. Every empire starts with maximum trust. The British Empire in 1815 was the bank of the world. The pound was as good as gold because Britain had the most gold, the biggest navy, and the strongest rule of law. But then, the empire trap sets in. Maintaining an empire is expensive. You need a military in every ocean. You need to subsidize allies. You need to pay for welfare at home to keep the population happy. Eventually, the cost of running the empire exceeds the income of the empire. This happened to Rome. This happened to Spain. This happened to Britain. And it has happened to the U.S. When you can no longer pay your bills with taxes, you have 2 choices. Austerity. Spend less. Shrink the military. And admit you are no longer the superpower. Debasement. Print the difference. Every single empire chooses option 2. It is politically impossible to choose option 1. No emperor, king, or president wants to be the one who presided over the decline. So they choose inflation. They choose to fake the prosperity by printing money. This is the sunset phase of the 94-year cycle. The British pound entered its sunset phase in 1914. They printed money to fight World War I. Then they borrowed massively to stay afloat in the 1920s. By 1931, the math didn't work. The world realized Britain didn't have the gold to back the paper. In a single week in September 1931, the confidence evaporated. The pound lost 25% of its value. The world shifted to the new rising power, the United States. Now, layer that template over today. The U.S. entered its sunset phase in 2008. That was when we stopped paying for our economy with production and started paying for it with printing. QE1, QE2, QE3. Then came 2020, the acceleration. We printed $6 trillion in 2 years. We are now paying more in interest on our national debt than we spend on our entire defense budget. We are borrowing money just to pay the interest on the money we borrowed last year. This is the exact mathematical condition of the British Empire in 1930, the French Empire in 1780, and the Spanish Empire in 1620. The product is broken. The trust is gone. The only reason the world is still holding dollars is inertia. It is a habit. But habits change very slowly, and then all at once. Historians will look back at February 26, 2022, as the day the dollar officially committed suicide. Before that date, the dollar was considered a neutral reserve asset. A reserve asset is supposed to be like Switzerland. It doesn't take sides. If you are China, Saudi Arabia, or Brazil, you hold dollars because they are safe, liquid, and universally accepted. You assume that even if you have a diplomatic disagreement with the U.S., your money is your money. On February 26, 2022, the U.S. and its allies froze $300 billion of Russia's central bank reserves. Now, put aside your opinion on the war. Look at this purely from the perspective of a central banker in the global south. If you are Saudi Arabia and you see the U.S. seize Russia's money, what is your immediate thought? Your thought is, if I disagree with the U.S. on policy, or human rights, or oil pricing, they can delete my savings with the push of a button. The dollar went from being a neutral store of value to a political weapon. In finance, risk is everything. Before 2022, holding dollars was considered risk-free. After 2022, holding dollars became a political risk. This broke the psychological dam. Since that day, the global demand for U.S. treasuries, government debt, from foreign central banks has collapsed. China has been dumping U.S. debt for 24 straight months. Japan is selling. Saudi Arabia has announced it will accept yuan for oil. They are not doing this because they love China. They are doing it because they are terrified of the United States. They are following the rule of 94. When the dominant empire begins to weaponize the financial system to save itself, the vassals start building lifeboats. This brings us to the shadow gold rush. If you want to know what the smart money is doing, don't look at what they say. Look at what they buy. Central banks are currently buying gold at the fastest pace since 1967. 1967 is a very important date. It was the year before the London gold pool collapsed, which led to the end of the Bretton Woods gold standard in 1971. History is rhyming. Why are Poland, China, India, Turkey, and Singapore hoarding physical gold bars? Because gold is the only reserve asset that has no counterparty risk. You cannot sanction gold bars sitting in a vault in Shanghai. You cannot freeze gold bars sitting in Mumbai. They are preparing for the day the dollar network is switched off. They are preparing for the expiration date. For decades, the U.S. could ignore the complaints of the world because there was no alternative. Where else are you going to go? The euro? It's weak. The yen? It's stagnant. The ruble? A joke. This is known as the Tina argument. There is no alternative. But the 94-year cycle always creates an alternative. Nature abhors a vacuum. Enter the BRICS alliance. Brazil, Russia, India, China, South Africa, and recently expanded to include Iran, Egypt, Ethiopia, and the UAE. Western media mocks BRICS. They say it is a disorganized group of countries that hate each other. India and China have border disputes. Russia is sanctioned. Brazil is volatile. They are missing the point. BRICS is not a marriage of love. It is a marriage of necessity. These countries represent 40% of the global population, and, more importantly, they control the commodities. Look at the new members. Iran oil, UAE oil, Egypt the Suez Canal. The BRICS alliance is effectively an OPEC of everything. They control the oil, the rare earths, the wheat, the manufacturing capacity, and the shipping lanes. The G7, the Western Alliance, controls the finance. They control the banks, the insurance, and the paper money. The war of the next 18 months is a war between the real and the paper. BRICS is building a parallel financial system. They are creating a payment rail called BRICS Pay that bypasses the U.S.-controlled SWIFT system. They are discussing a new reference currency backed by gold and commodities. Why does this matter to you? Because the value of the dollar in your pocket depends entirely on foreign demand. If Saudi Arabia stops pricing oil exclusively in dollars, the petrodollar dies. If the petrodollar dies, hundreds of billions of dollars that are currently held overseas to buy oil will come flooding back home to the U.S. When that tsunami of dollars hits the American domestic economy, we get hyperinflation. This is the mechanism of the collapse. It is not that the dollar disappears. It is that the dollar comes home. For 50 years, we exported our inflation to the world. We printed money, bought cheap stuff from China, and China kept the money. When the 94-year cycle ends, the flow reverses. The world sends the dollars back, and they stop sending the cheap stuff. We are left with trillions of pieces of paper and empty shelves. So why do I say 18 months? Why mid-2026 to 2027? Because we are approaching a liquidity cliff. The U.S. government has roughly $9 trillion of debt maturing in the next year. This is debt that needs to be refinanced. We have to find buyers for $9 trillion of bonds at interest rates of 5%. Who is going to buy them? The Fed. If they buy them, they restart inflation instantly. China. They are selling. Japan. They are trying to save their own currency. U.S. banks. They are already insolvent on a mark-to-market basis. There is no buyer. In roughly 18 months, the mathematics of the U.S. Treasury market break. The government will face a failed auction. This means they will offer debt to the market, and no one will show up to buy it. When that happens, the interest rate on U.S. debt will spike to 10%, 15%, 20% overnight. This is the Minsky moment. The moment where the boom turns into a bust because the debt structure cannot support the interest payments. When that auction fails, the Federal Reserve will have only one choice. They cannot let the U.S. government default. That is the end of the world. So they will invoke yield curve control. They will announce that the Federal Reserve will buy 100% of the government debt. They will print the money to cover the entire U.S. budget. This is the moment the dollar dies. It doesn't cease to exist, but it ceases to be a store of value. It becomes a lira. It becomes a peso. The exchange rate might not even move that much against the euro, because the euro will be printing too. But the price of real things, food, energy, housing, gold, Bitcoin, will go vertical. We are talking about a repricing of reality. The 94-year clock tells us that the dominant power always tries to inflate its way out of the debt trap, and the market always punishes them for it. We are 18 months away from the moment the Fed becomes the only buyer of U.S. debt. And when the printer is the only buyer, the currency is dead. If the dollar dies, what replaces it? This is the trillion-dollar question. Many people think the Chinese yuan will replace the dollar. This is unlikely. China does not want to be the world reserve currency. To be the reserve currency, you have to run trade deficits, buy more than you sell, to spread your money around the world. China is an export economy. They want to sell, not buy. Plus, nobody trusts the CCP with their life savings. Others think it will be Bitcoin. While I believe Bitcoin will absorb a massive amount of the wealth fleeing the dollar, it is unlikely to be the sovereign settlement layer for nation-states in the next 24 months. Governments hate losing control. They will not adopt a currency they cannot print. What is coming is a multipolar reserve system. We are going back to a world of fragmented currency blocks. The dollar block, North America, Western Europe, Japan, Australia. The gold/commodity block, China, Russia, India, Brazil, Saudi Arabia. Trade between these blocks will not settle in dollars. It will settle in a neutral asset. This brings us to the rise of mBridge and CBDCs. mBridge is a project being built right now by the Bank for International Settlements, the central bank of central banks, involving China, UAE, Thailand, and Hong Kong. It is a digital ledger that allows countries to trade directly with each other using digital central bank currencies, CBDCs, completely bypassing the US dollar and the US banking system. It goes live, you guessed it, in roughly 18 months. The technology is being laid for a world where the dollar is optional. And once the dollar is optional, the US loses its ability to fund its military and its deficit. The empire retreats. The 94-year cycle completes. But for you, the individual, this geopolitical chess game is secondary. The primary issue is, what happens to your savings when this split happens? Before we talk about what to buy, we have to unlearn the way we count. For your entire life, you have measured your wealth in dollars. I have $10,000 in savings. My house is worth $500,000. In the next 18 months, this metric will become a trap. It will lie to you. We are entering a period of monetary illusion. This is what happened in Weimar Germany in 1923, and more recently in Venezuela and Argentina. In a collapsing currency regime, the stock market often goes up. If you look at the Venezuelan stock market in 2016, it was the best performing market in the world. It went up 50,000% in a year. Did the Venezuelan investors get rich? No. They starved. Why? Because while their stocks went up 50,000% in bolivars, the cost of bread went up 100,000%. In nominal terms, number of dollars, they were billionaires. In real terms, purchasing power, they were destitute. This is the most dangerous phase of the 94-year cycle because it confuses the middle class. You will look at your 401k in 2026, and it might be hitting all-time highs. You will feel safe. You will think, the economy is booming. Meanwhile, your grocery bill has doubled. Your insurance has tripled. The numbers in your bank account are bigger, but they buy less. To survive the expiration of the dollar, you must stop pricing your wealth in dollars. You must start pricing your wealth in hard assets. Ask yourself, how many ounces of gold is my house worth? How many bitcoins is my car worth? When you switch to this denominator, you realize the terrifying truth. Asset prices aren't going up. The dollar is going down. The house is the same house. The gold is the same gold. It just takes more worthless paper to buy them. Once you accept this, the investment strategy becomes clear. You don't want profit. You want preservation. Let's talk about the specific assets that survive a reserve currency collapse. First, the king gold. Gold is not an investment. Gold is money that cannot be printed. If you look at the last 500 years, from the Portuguese Real to the British pound, every time an empire fell, gold was the lifeboat. Why? Because gold is the only financial asset that is not simultaneously someone else's liability. If you hold a bond, that is the government's liability. If you hold a stock, that is a company's liability. If you hold a bank deposit, that is the bank's liability. If the counterparty goes broke, your asset vanishes. Gold is no counterparty. It is just a lump of metal. It doesn't need a CEO, a board of directors, or a Federal Reserve to exist. In a world where trust is breaking down, capital flees to the asset that requires zero trust. Currently, less than 0.5% of global financial assets are held in gold. In 1980, that number was 5%. If we simply revert to the 1980 mean, the price of gold has to do a 10x from here. But a warning, avoid paper gold, SLVGLD. In a true systemic collapse, financial derivatives might be frozen. If you can't touch it, you don't own it. The 94-year reset is physical. You want the coins in your hand, or in a vault outside the banking system. Now, the controversial one. If gold is the analog lifeboat, Bitcoin is the digital lifeboat. Many traditional finance people hate Bitcoin. They say it has no intrinsic value. They say the government will ban it. But they are missing the macro perspective. Bitcoin was created in 2009 specifically for this moment. It was born out of the 2008 financial crisis as a response to central bank printing. Its code dictates that there will only ever be 21 million coins. No Federal Reserve can print more. No politician can debase it. In the chaos of a currency transition, capital needs mobility. Gold is heavy. It is hard to move across borders. If you need to flee a collapsing jurisdiction, you can't carry $1 million in gold bars through airport security. You can carry $1 billion in Bitcoin in your head by memorizing 12 words. This unseizability and portability makes Bitcoin the ultimate asset for the refugee. And in a reserve currency collapse, we are all refugees looking for safety. We are seeing a barbell strategy emerge among the smart money. 50% historic safety, gold/land assets that have survived for 5,000 years. 50% asymmetric upside, Bitcoin a technology option on the future financial system. The middle, the 60-40 portfolio of stocks and bonds, is the kill zone. But wait, you ask. What about real estate? Isn't land a hard asset? Yes and no. Real estate is a hard asset, but it has two fatal flaws during a sovereign debt crisis. It is immobile. You cannot move your house to a safer jurisdiction. It is easily taxed. When the government gets desperate for money, and they will be desperate in 2026, where will they go? They can't tax Bitcoin easily if you hold it correctly. They can't find your gold buried in the garden, but they know exactly where your house is. Property taxes will skyrocket. We are already seeing this in major cities. They will treat homeowners as piggy banks to fund the deficit. Furthermore, real estate prices are heavily dependent on interest rates. As rates spike during the failed auction scenario we discussed, mortgages become unaffordable. The nominal price of your house might stay high due to inflation, but the real value will likely plummet, and the cost of holding it, taxes, maintenance, insurance, will destroy your cash flow. The only real estate you want to own in this cycle is productive land, farmland, energy-producing land, land that generates basic resources that people need to survive. A condo in Miami is a luxury. A farm in the Midwest is a necessity. In a depression, luxuries crash, but necessities explode in value. 46:00, Part 10. The Jurisdictional Hedge. There is one more diversification you need, and it isn't an asset class. It is a political class. If you live in the United States, Canada, or Western Europe, your entire life is tied to the dollar block. Your job, your house, your bank, your pension, it is all in one basket. If that basket falls, you lose everything. The wealthy have always known this. That is why they have Plan B passports. That is why they have bank accounts in Singapore, Dubai, or Switzerland. You might think, I'm not a billionaire. I can't do that. Wrong. It has never been easier to open an offshore bank account or get a second residency. Why do you need this? Because of financial repression. When the dollar crisis hits its peak, the U.S. government will likely implement capital controls. They will make it illegal, or very expensive, to move money out of the country. They will try to trap the liquidity inside the U.S. to force you to buy those treasury bonds. If you have a bank account in a neutral jurisdiction, like Singapore, before the controls are put in place, you have a lifeline. You have access to the global economy, even if the domestic gates are closed. This is the ultimate insurance policy. It is not betting against America. It is betting on your own freedom. The hardest part of this entire script isn't the math. The math is easy. 94 years is up. The debt is unpayable. The cycle is turning. The hardest part is believing it. Humans suffer from normalcy bias. When the Titanic hit the iceberg, people didn't run to the lifeboats. They stayed in the warm dining room. They complained that the ice on the deck was making things cold. They ordered another drink. Why? Because the Titanic was unsinkable. Because they had never seen a ship this big sink before. Because the band was still playing. We are on the Titanic. The dollar is the ship. The iceberg was 2008. The water is taking on 2022, and the band, the media, is playing louder than ever. They are telling you about AI stocks. They are distracting you with culture wars. They are telling you soft landing. They are trying to keep you in the dining room while the smart money quietly heads for the exits. The people who survive these 94-year resets are not the smartest. They are not the strongest. They are the ones who are willing to look at the data, accept an uncomfortable truth, and act before the herd. Historians Neil Howe and William Strauss wrote a book called The Fourth Turning. They mapped out generational cycles in America. They found that every 80 to 90 years, society goes through a crisis. 1780s, Revolutionary War. 1860s, Civil War. 1940s, World War II. 2020s, the Great Reset. It is not a coincidence that the fourth turning aligns perfectly with the reserve currency cycle. They are the same cycle. A fourth turning is a season of winter. Institutions are destroyed and rebuilt. The old order collapses. It is a time of maximum danger, but also maximum opportunity. The world that emerges on the other side of 2026 to 2030 will look nothing like the world of 2019. The dollar will likely still exist, but it will be a local currency, not the global standard. The American empire will likely still exist, but it will be one of several poles, not the sole hegemon. The financial system will be digital, transparent, and backed by hard assets or hard math. The 50-year party of something for nothing is over. The bill has arrived. So what is your next step? Don't panic. Panic is paralyzed. Plan. Planning is power. Audit your exposure. How much of your wealth is tied to the dollar system? If it's 100%, you are naked in a blizzard. Build your position. Start accumulating the lifeboat assets: gold, Bitcoin, productive land. Dollar cost average. Don't go all in tomorrow, but start moving today. Become essential. In a depression, financial skills, day trading, become less valuable. Real skills, engineering, farming, repairing, building, healing, become invaluable. Invest in your own ability to produce value in the real world. The clock that started in 1931 is ticking its final seconds. The 94-year rule is not a theory. It is a grave. Do not let your financial future be buried in it. The transition will be volatile. It will be scary. But for those who are prepared, it will be the greatest wealth transfer in history. The dollar is expiring. Make sure you don't expire with it.